Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on the 3rd of May 2018. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. One theme really running through the session, I should say, over the last 24 hours, and that is of a rebound in some of these majors against the US dollar. We've seen that in the euro, in the Aussie dollar, and the New Zealand dollar, all making good gains against the greenback. But even the Russian ruble has bounced back against the US dollar. The dollar, for its part, in passive, 92.50 dollar index was trading shortly before we recorded the video. Be interesting to see if those trends can continue throughout today and into tomorrow's session ahead of the key non-farm payrolls data. Right then, what's on the calendar? Events that may move the markets today. A pretty busy calendar, and we've already had some key data out of Australia this morning in the form of trade balance data for March. More on that a little later on. To come then at 8:30 GMT, we have services PMI data out of the UK, and that'll be followed at 9 o'clock by consumer price index data from the wider Eurozone. Both of those items potentially currency moving. At 12 GMT today, we'll hear from ECB Vice President Vitor Constancio. He's heading towards the end of his term, of course, at the ECB Council, but he'll be speaking then. 12:30, we'll see the release of trade balance data for March out of the USA, accompanied by continuing and initial jobless claims data that takes on extra significance, coming as it does a day ahead of the non-farm payrolls. We will have the second of our central bank speeches on the day, and this time from the ECB board member Kerr, and that'll be at 12:30 GMT. 13:45 GMT sees the release of service and composite PMI data out of the USA for April, accompanied by at 1400 the ISM non-manufacturing PMI and factory orders data. The PMI data for April, the factory orders data for March. And at 1400 we have our final item of the day, a speech by the Swiss National Bank Chairman, Mr. Jordan. Right, breaking news and comment then that's caught my eye overnight. First of all, Australia has posted its largest trade balance since May 2017, and that may well be the reason that the Aussie dollar has enjoyed a decent bounce over the last 24 hours. Hong Kong's regulator has taken the unusual step of warning of a possible local interest rate volatility ahead of a potential rate rise in June. Surprising that the market's regulator would come out and say that, but one to keep an eye on since it has. Trade talks will get underway today in China between China and a high-ranking US delegation sent to Beijing by President Trump in hopes perhaps of averting a trade war. And the US Federal Reserve left US rates on hold last night but stayed on course for a June rate rise, though some commentators have pointed to a more dovish tone in the post-meeting statement. Right then, food for thought, something to take away with you into the trading day and beyond, but why not think about this? And as the markets get ready for a US rate rise in June, the Bank for International Settlements has flagged the growth of US dollar-denominated credit and debt that has been extended to emerging markets, which grew by an astounding 10% in 2017. Now, that growth was driven by a weaker US dollar and lower US interest rates. However, the US dollar is rising once more, and EM sensitivity to US interest rates is increasing as a result. And here's the chart that shows us the growth in debt and credit instruments over the period from 2002. That's debt and credit extended to EM markets in US dollars, and a table here that shows the performance of emerging market currencies against the US dollar as of the 1st of May. Please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please contact your Pepperstone account representative. Thank you for your time.